Greetings, my beloved clients and friends. So I'm out here this morning, braving the freezing temperatures to bring you an update on this interesting day in the market. The great J. Paul Getty said, "Buy when there's blood in the streets." Well, today there's blood in the streets. This morning, Russia invaded Ukraine, and pre-market, the market looked like it was going to be atrocious, and we were hoping that would be capitulation and a buying opportunity, but actually it wasn't as bad as we thought. We'd been in the office this week talking about, hey, prices are starting to look kind of cheap, and we're just saying that what we need is one really bad high volume day with what's called capitulation, which we haven't really seen yet. There was a day that kind of looked like that, was January 24th. It was way down, then closed way up, and with a lot of volume, but it wasn't quite the capitulation that we were expecting. And yesterday the market broke down below those January 24 lows. So we've been saying that 22 is going to be a challenging year, and that prediction is holding true. But there's a lot of good companies that are kind of looking cheap right now, and I was hoping to do some buying this morning. I may still do it. A couple companies that in particular I've had my eye on. They hit my price target pre-market, but they've bounced from that. I won't tell you both of them because that's how I get paid to know. But one of them is Walgreens Boots Alliance, and Walgreens is one of the oldest drugstores in the country. Back in 2014, they bought a company called Boots, which was one of the oldest drugstores in England, and they formed Walgreens Boots Alliance. And they're getting ready to sell Boots, and I'm guessing they're probably going to get about $10 billion for it. And so I think that would do Walgreens' balance sheet some good. And it already looked cheap. It's paying like a 4% dividend. It's way off its highs, and it generates really strong, consistent revenue and earnings. So that's one we're looking at. But so when things are on sale, it's a good time to buy. What's not so pleasant is when you already own those good companies before they went on sale, which we have experienced. And we've had around November, the accounts hit a high, and so it's been about 3 months that we have not hit a new high, and that we've come down quite a bit from our November highs. And 3 months is a long time, and sometimes fatigue will set in, looking at the balances and the statements. And another great quote is, I learned it from Brian Tracy, but I don't think he's the one that penned the phrase, "Fatigue doth make cowards of us all." And this is not a time for cowardice. Warren Buffett said, "Be fearful when others are greedy, and be greedy when others are fearful." And would you say that the tone on Wall Street right now is more one of greed or of fear? I would say it's more one of fear. So his prescription is to, in those times, be greedy. Or like J. Paul Getty said, is to buy when there's blood in the street. So we've done quite a bit of selling in the last few months, trying to clean up the portfolio and get rid of some of those high flyers that have really gone out of favor. And for the most part, I think we're probably 90% done with our selling. There may be something to change that, but we're more inclined to do some buying at or near these levels. And that doesn't mean that the portfolio will turn around overnight or over a month, but to position ourselves to, I mean, if we would look back 2 years from today, my guess is we would look at a day to day like that was probably a pretty good buying opportunity. So we don't want to get fatigued during this time. We want to stay courageous. I don't like the phrase being greedy, but if there was ever time to be greedy, we're getting close to that, I think. I'd rather rephrase Warren Buffett's phrase like this: don't be greedy when others are greedy, and don't be fearful when others are fearful. So that's just some thoughts on this market and what we're inclined to do. We're more inclined to buy on weakness than to sell due to fear. And because the other thing is, the unemployment numbers came in very good. I mean, unemployment is very low. It's not like stuff is being, inventories are at an all-time high and stuff's just sitting on the shelf. They can't keep stuff on the shelf. Part of that is a supply shortage and problems in the transportation industry, which I do believe could affect earnings in the coming quarters. But like I said, I think we're closer to buying time than selling time right now. And so the other thing is, we're talking about fatigue. There's fatigue amongst people that have been locked up during COVID, and they're itching to get out and travel and spend money and see the world. So I think that bodes well for the economy, and there's some exciting things happening in the world of technology. It was just announced that they come up with a cure for HIV, and we're going to have announcements like that because of the rapid acceleration of technology, the applications of those technologies. So those are some underpinnings that give the market strength, and we know that markets move in cycles. We've been through a down cycle, but typically following a down cycle is an up cycle, and after winter comes spring. So we just want to keep us a level head and not let emotions get the best of us during this time. And we're watching closely. I was just looking at the markets this morning. I was up at 4 when I'm looking what's going on pre-market and around the world. And so fasten your seatbelts because it might be a choppy ride, but we're at the helm, okay? So have a great day.